Hi everyone, and welcome to the ninth episode of Hub Talks, a space for us to discuss topics emerging from the local and, of course, global fintech scene. My name is Arif Ismail, and a privilege to be the chairperson of the Intergovernmental Fintech Working Group, or better known as the IFWG, and as well as the head of fintech at the South African Reserve Bank. And of course, your host for the Hub Talks. The South African financial regulators have established the IFWG already in 2016, but as you know, we put together an innovation hub in April 2020. I'm very pleased to know and to inform you that the regulatory guidance unit is close on to almost 100 queries. And of course, we've been actively working on the sandbox applications that have come through since July. So in today's session, I have the absolute pleasure and delight of chatting to Professor James McAndrews, CEO and chairman of the board of TNB USA Incorporated and a seasoned central banker. We'll be talking about the recent and future innovations that may hit the fintech domain and the implications, of course, for regulators and market participants. Hi, James. How are you doing today?
Hi, Arif. Doing very well, thank you. It's a pleasure to be here on this talk.
Absolutely. Jamie, you were saying when we were chatting before the session that you had the privilege of being in South Africa just before the COVID lockdown, etc. And your sense was that there's quite a lot of activity that was going on. Maybe just some quick reflections on what you observed at that point when you came to South Africa?
Yes, thanks, Arif. I was very pleased to visit the South African Reserve Bank and the National Payment Systems Department to discuss various issues that South Africa is working on in the payment system space, including the development of a potential new legislation for South Africa, which would help rationalize some of the regulation of payment systems and provide some clear guidance to the regulators from the legislature on how to address payment system issues. So that was very interesting, and I was able to meet with a couple of bankers who are doing some innovative new products within South Africa.
Fantastic. Jamie, agreed with you. I think the NPS bill, as it is probably one of the most important pieces of work that's been ongoing. And similarly, there's a lot of stuff that's going on in the fintech domain. And I suppose maybe the key thought that's kind of come to mind is that COVID-19 has certainly reshaped everything that we know, including how we pay and so on. And maybe what I'd love to do is just start off by asking a broad question. How significant do you think fintech is? And why is that the case?
Well, I think fintech is quite significant for a number of reasons. And let me begin with a anecdote about the effects of COVID-19 here in the United States. And I should apologize in advance that much of my discussion will be United States centric because I'm most familiar with that. But one of the issues that developed fairly early on this year in 2020, before mid-year, it was clear that there was a coin shortage in the United States, and businesses would place signs on their door fronts saying, please don't pay with coins or bring in coins. We have no coins to make change. The nation is suffering a coin shortage. And many people were really befuddled by this coin shortage because the mint was continuing to mint coins. And of course, there were many millions of coins outstanding. The coins had not been destroyed. So where were all the coins? And because of some good analysis by J.P. Koning, an analyst in Montreal who studies payment systems issues, and other people, it became quite clear. It became clear quite early on that the reason that there was this coin shortage was that people's behavior had changed. rather than spending coins and circulating coins, the coins were remaining in their home in their coin jar. So it was the circulation that had slowed down, not the number of coins. And a similar thing apparently is happening with currency as well. So there are many bills outstanding. The bills aren't circulating as rapidly as they would in a normal year. And so fewer bills are being removed from circulation. So there are a lot of bills in people's wallets that are of declining quality that would otherwise be removed from circulation in a normal year. So this is a fascinating development, and it draws our attention to the behavior of people and how people use payment media and how they think about the payment media. And also, it's a very important lesson on how the payment media individual actions can affect everyone's experience of the payment media. It's truly one of the, anything having to do with money is one of those things in society that is a general equilibrium phenomenon. So the fact that there's a coin shortage is surprising to people. It's a society-wide event caused by many individual human decisions not to spend coin and to have a coin just in the jar. That's an interesting idea to keep in mind. And in large part, many people ascribe this to the wish that people had to avoid touching hands and exchanging coin and bills hand to hand, and instead using the machine reader that could accept a card payment.
Absolutely, absolutely, Jamie. I think what you've managed to do, often when we think of what's going on in the economy, we kind of go to the most macro level, and what you've managed to do, I think, is tease out this kind of behavioral aspect and how individuals think about their payment media, etc., but impact the aggregate, on the total. Absolutely. That's fascinating, and I think you've probably drawn out the concern on handling physical notes, etc., and hence a shift towards perhaps even more contactless transactions, whether that's with a card or whether that's a mobile device. Absolutely.
I think going back to the topic of fintech, which is the interest of this whole series, and I commend you for the whole series. I think that we can think of fintech as having a number of important drivers, and one is certainly the increase in commerce that's done remotely over the internet. So that's just demand driver number one, is that we buy many goods and services using our computers over the internet. And as became apparent decades ago now, cash and check, the paper-based payment systems that were so dominant in the 1980s, for example, were not well suited to that environment of the internet commerce. So that created this huge demand for new ways to pay, to make payment over the internet. And we can talk about how that demand has been filled. The other aspect is a supply factor, which is the development of all sorts of communication and computation technologies, including cryptography, that has made the transmission of information over the internet much more secure and much more able to sustain commercial transactions, including payment transactions. So we have this, extraordinary demand from internet commerce, and we've had concomitantly this extraordinary explosion in the supply that make technological solutions available that weren't available 20 to 30 years ago. And then the COVID-19 development that I was talking about earlier, that's a new an economist would call that a taste parameter, that people are realizing that they have new preferences for handling currency and coin in the physical world at the point of sale. So there are things about fintech solutions, such as you were discussing, contactless payments, which are now possible, that may actually be more convenient even in the face-to-face transactions, and not only for internet commerce. So I think that's another aspect of the fintech demand surge.
Yeah, absolutely. You make me think, Jamie, of the example in the East, where this demand for doing online transactions was prevalent. But to your point about the supply side and the ability for fintech firms, and probably one of the largest fintech firms in the East, looking at the trust factor of knowing, that the payment is made, but the goods equally have to be delivered, and has spawned almost, an unbelievable platform type industry for making online payments easy, convenient, fast, simple, but most importantly, I think, as you point out, trustworthy, right? Mm-hmm. Maybe I can ask a naughty question and along the track of fintech and ask, so what fintech innovations attract your attention, Jamie?
Well, I think that it's a very good question, and I think it has to do with the interaction of these platforms, as you suggested, and the payment technologies. So you made a very important point, Arif, which is that, again, and there was much more discussion of this explicitly, it seems, a couple decades ago. There was a famous cartoon published in the New Yorker magazine here in the United States, which has wonderful cartoons. And the punchline was people working on a computer and saying, on the internet, no one knows you're a dog. And there was a dog on the other part of the computer. And that trust factor is very important. And we have seen how that trust has been established over time. And exactly as you suggest, the trust factor has been established both through these developments in cryptography and so on that establish secure connections between parties on the internet, but also through the development of very large platforms. Amazon comes to mind, but there are many other examples, Etsy, eBay, and other platforms where, even though there may be individual sellers selling a book on the other side from some other country, that sale is taking place under the umbrella of a platform such as Amazon that provides the trustworthy connections. So the buyer is dependent on this intermediary. So the platform now is playing a very important role financially because it's providing that trustworthy intermediation. In the physical world, in contrast, you're at the point of sale. The trustworthiness is provided by the environment itself. You see the good in front of you. You see the merchant and so on. So there's no need for intermediation there on the trustworthiness side. And then one can make the payment. And if the payment is made through electronic means, then the trustworthiness is provided by the financial intermediary, the bank that is handling the payments. So on the internet world, this notion of trust has expanded, and the need for intermediation has expanded in a way to provide trust in the validity and identity of the seller and the goods, as well as the financial intermediation. And so there was a really wonderful paper by Marcus Brunnermeyer, Harold James, and Pierre Landau. And in that paper, they talk about how payments in the future, in the current world, and perhaps in the future as well, will become much more tied to these large sales platforms. And that even more than national boundaries, the boundaries of payments will be much more circumscribed by the boundary of the platform on which they take place. So that's a very, bold hypothesis. But I think that their argument is really both very intriguing, and I think there is a lot of evidence for it even in today's world. And that's led to some of the proposals, such as the Libra proposal by Facebook, which has many more than 1 billion users, and would be a very powerful platform to provide that sort of intermediation.
Absolutely. I often think back, that even for traditional payment systems, if I could call it that, a check payment system, or the typical card, international association payment systems, etc. I kind of would have always thought about them as platforms in the past. But I think the example that you draw out now of the kind of scale that platforms could bring at even a global level, like the likes of Libra, is probably unprecedented. Even if I think of other platforms like Alipay or WeChat Pay, we're talking about billions of customers connecting to these platforms and almost doing anything on it, Jamie. Like, I could book my dentist appointment, take my dog to the vet, do my ride hailing, etc. Do you think that existing platforms will survive over the next, let's say, 10 or so years, or will we see emergence of absolutely new platforms? And I have to plant the thought, including, maybe a mega platform for central bank digital currencies.
Well, that's a good question, which I won't try to answer. I have no idea what will happen over the course of 10 years. I'm sorry, Arif. We do live in a extremely dynamic economy. There's no doubt about that. One does wonder whether the incumbency advantage of many of the platforms that have already been established is so great that they won't be displaced anytime soon. It's something that I can't predict.
Yeah, absolutely. In fact, you make me think, Jamie. I can remember it must have been about 15 years ago. People were saying to me, mobile payments is going to take over all of card payments. And at that stage in South Africa, we probably had if I take out cash, of course, 1 in every 3 transactions was a card payment. And about 2 years ago, I looked at that stat again just to have a look at, what has shifted. Has it gone up? Has it gone down to 1 in every 4 or 1 in every 5? And to my amazement, 1 in every 2 transactions in retail was card based. So I'm absolutely fascinated by the evolution of payments, etc. But as you point out rightfully, it's extremely difficult to predict. Maybe I can turn attention, Jamie, to any 2 innovations that you kind of look forward to in the next 5 to 10 years. what would it be?
Well, again, I'm very hesitant to forecast or anything, but let me follow up in answering in addressing that question. Let me follow up on what you were just talking about, which is the continued growth in card payments that I think is something that is very easy to overlook. I think that especially if one looks at the the buzz and the commentary about central bank digital currencies and fintech and so on, it's very easy to overlook the dominance of in payment terms of credit and debit cards. They've been an extraordinary innovation, decades and decades ago, and they continue to provide very important, methods and institutions for people to make payments. And the rise of the debit card has been extraordinary in the United States. It's become the single most popular payment method, and it's becoming more and more present, gaining greater ubiquity all the time. And then, as your comments alluded to, the card associations or companies have done a very good job of providing services in the mobile sphere, so that one can make payments using one's credit card account in the mobile environment, and various platforms, wallets, and so on have accommodated that very well. So I think that one thing that I feel very comfortable in saying we will continue to see over the next few years is further development of the credit and debit card infrastructure, and the applications that will use the credit and debit card infrastructure. And I think that those will continue to provide a very important means of payment, probably the most important electronic means of payment that we will see across countries. I think the other development that I'll mention that we have already seen take place is the real-time payment move. This is something that has been a very recent development in many countries. Here in the United States, the Clearinghouse Company developed a real-time payment system, and it's just gaining ground. But I think that there are many applications for which that kind of payment could be useful to people. And I think we just will have to see how well all the applications that will come along, and innovations that build on that bank account to bank account transfer, how well those applications serve customers, and how far they penetrate. But I think that will be a very interesting type of payment for us to watch and to see if that really takes hold.
Absolutely, Jamie. I was going to ask you, that it would be remiss of me, knowing your experience in the US market, to not ask what are those top of mind kind of innovations that the US is thinking about. We've read up a bit, on the thoughts on a digital dollar. But faster payment seems to be equally, the thing that's being focused on. One of the things I battle with in my own mind is that, we've had faster payments here in South Africa for quite some time. We've had a faster payments chassis since about 2004, 2005. But the uptake on it has been relatively low. And if I contrast that with the likes of PayM in the UK, etc., the take-up has been quite rapid. But maybe my thinking around that, Jamie, is that the reason for that is what you're saying. it isn't just about the faster payments value proposition. It's probably equally about the underlying added utilities that you get. And if I make it practical, if I want to send you money, all I need to know is your proxy, your cell number, and the chassis enables that to happen. My sense is that's potentially one major reason as to why faster payments takes off faster and gain scale in some jurisdictions versus others. What would you think of that, Jim? Yeah.
Yes, no, I think you're absolutely right. I think there are a lot of factors that influence the demand for these services, and in addition to the types of characteristics that you were just talking about how easy it is to use, which I think is paramount in the use of these things. There are also, for example, in the United States, there are also liability rules that are present for debit card payments that consumers will have to become familiar with, whether they apply in the real-time payment system context as well. So all of those issues make a big difference, and so there can be quite a divergence from country to country depending on how those payments are introduced, their liability rules, and how strong the complementary innovations are that support that type of payment.
Absolutely. You again make me reflect. I know that one of the issues that we had in the faster payments domain is fraud. So to your point, that for traditional payment systems, and I'll just pick direct credits as an example, there's always a delay, and you could then have mechanisms in place to trap any nefarious activities. But in a real-time chassis, you're talking about transfer of funds in about 60 seconds or so. And I know that in some instances, faster payments switches have applied techniques such as artificial intelligence and machine learning, etc. But I think what you've done is you've sensitized that, it's the rules of the game, like liability shifts, that are fundamental to have clarity on. In order for participants to join, meaning banks and clearers and settlers. If I change tack slightly, I know that one of the areas that you have deep knowledge in as well is interchange. And maybe a question that goes through my mind is, how fundamental is interchange? We often think of it just for card-based transactions or debit pull transactions. Is it a mechanism that's applicable in the credit push world?
I think it can be. Interchange has been used very successfully by the card companies to gain both greater uptake of card-based payments and greater usage of card-based payments. So I think that whether interchange is used or not depends on the fine details of the particular innovation. We live in a world in these platform worlds. So getting back to what we were talking about earlier in terms of internet commerce and so on, many economists have recognized that these platforms have a type of organization in which they're trying to attract, in the case, let's say, of a bookseller or something like that, they're trying to attract both the publishers on one hand and the booksellers. And then on the other hand, they're trying to attract the customers. And so they're really attempting to sell to two different groups simultaneously, so those groups can get together and then actually buy a book and simultaneously sell a book. So that and economists have recognized that activity of trying to sell to two different groups at the same time can give rise to some interesting interactions in the pricing to the different sides of the group. And this is, we're familiar with this for a long time. For example, in newspaper pricing, it's long been a regularity of newspaper pricing that newspapers charge advertisers a lot of money to place ads, and then they charge subscribers, just a small amount of money to purchase the newspaper. And in that way, again, the newspaper publisher is trying to attract advertisers and readers. But that pricing scheme where one side is charged a lot and the other side is charged a small amount, sometimes called two-sided pricing, is the sort of logic that gets you into an interchange where one side is bearing more of the burden than the other. In the case of newspapers, they can go to the advertiser and say, look, we have thousands and thousands of readers, so that's why you pay a high price.
Yeah.
The reader, typically in that case, really, it doesn't matter if there's 3 ads on a page or 2 ads on a page. What they want is the news. So they're much less sensitive to the price of the newspaper based on advertising. So the logic suggests that you'd place a very low price on the subscriber. So, and that's the same type of logic in card-based payments. The card company would like to go to a merchant and say, we have millions and millions of cardholders, and if you put in place this machine reader and so on, and establish a relationship with a particular type of bank that can handle card transactions, then all of those people could potentially purchase goods in your store, and that would be very attractive to you. And so interchange has been very useful in the card context. Typically, merchants pay a larger share of the freight than the cardholder, and that has proven very useful. And a lot of it is a difficulty for a new type of payment system to be developed. Suppose that there were a new fancy payment system developed and it cost absolutely nothing. It was just a free payment system. And you'd go to a consumer and you'd go to the merchant and say, here, sign up with this payment system. It costs you nothing. And the merchant says, sure, I'll sign up. It costs me nothing. And you go to the consumer and you say, here, sign up for this payment system. It costs you nothing. And the consumer says, well, it may cost me nothing, but where's my 1% rebate from the grocery store?
Oh. Absolutely.
So it's very hard to make inroads, even if the payment system is free to both sides, because with interchange, one side is getting a bonus in many cases. In the United States, in credit card deals, for example, many people receive cash back. So it's a competitive technique. It's a competitive pricing technique, and all types of payment systems, if they want to make inroads, must confront how to employ that type of pricing to attract customers.
Absolutely. That's deeply insightful, Jamie. Thank you. On a much lighter note, I was trying to explain this to a friend of mine who, knows very little about payment systems. He knows how to use his card, etc. And after I described all of this, the example that he came up with was, oh, I understand this interchange. It's just like when I go to a nightclub on a Thursday and it's ladies free night. And I was like, what do you mean? And he was like, no, we pay as gents and they come in free. And I was like, oh, is it the same? And when I thought through it, I kind of concluded, oh goodness, it is a platform, the nightclub. One side supplements the other side, and the gents are willing to pay, the women come for free, and people know that they will have a stronger chance of meeting people. But that's on a much lighter note. Jamie, before we let you
You
go,
have to assume heterosexual preferences there as well.
Absolutely, totally, Jamie. Maybe before we let you go, Jamie, and thank you for the time. One of the things I'd love to tease your mind on is just, again, back to central bank digital currencies. We hear of a digital euro, we hear of digital dollar, we hear even of Project Sand Dollar in the Bahamas, that has made significant progress to get a CBDC, a central bank digital currency out. What are your thoughts on a central bank digital currency? And I know it's a really broad kind of question, but it's probably intentional to just get your perspective.
Well, thank you, Arif. Maybe we can put this off to Hub Talk number 10.
Absolutely.
Because it is a big topic. I will make a couple points. First of all, I think we are in a world, going back to the early part of our discussion, a lot of commerce is done online now, and currency and physical bills are not employed in that realm of commerce. So I think there is a important question, and I think this is the way that Sweden has framed their interest in a central bank digital currency, is what is the role of the state, of the nation, in providing a means of payment that is useful for the type of commerce that is being done in the nation? Is there any role? And we have long thought that there is a role, and that the role is to provide currency. And so I think the question for central bank digital currency, is there any role for the state if a lot of commerce moves online? We also discussed the role of platforms in online commerce and their importance in providing a trusted environment within which commerce can occur. And I think that we have seen the central bank take a lot of actions, such as the presence of a lending facility from the central bank to banks. In the United States, this is called the discount window.
Right.
So a bank, if it can't borrow funds from anyone else in the market, can always go to the central bank and borrow funds. And many central banks have facilities like this. And the question is, why does the central bank provide that facility? Isn't the market going to lend funds to banks that need them? And my former colleague Tanju Yorulmazer and co-authors have suggested that the reason the central bank does this is to provide a competitive market, kind of provide what we might think of as a public option, so that to constrain the market to provide efficient outcomes, so that the market can't completely monopolize and exclude a bank that is otherwise healthy from the market. We might think of a central bank digital currency in the same way, that there may need to be a central bank digital currency if a lot of activity is online and otherwise would be provided only by monopolistic platforms, let's say. So I think it's an issue that has to do with the competitiveness and the efficiency of payment in the online world, and what is the alternative. If the market can provide those payments efficiently, meaning at a price that is not that does not build in any monopoly profits or something, then I think digital currency provided by the central bank is a fairly low priority. But if otherwise people would be exploited too much by monopoly pricing, then a central bank digital currency might be something that could be used. I think it'll take quite some time for these sorts of determinations to be made. I think that some experimentation in how these digital currencies might work will be very useful in helping provide the range of possible solutions, ultimate solutions for the how a digital currency would work.
Thank you. That's probably one of the most intriguing, contrasting examples that I've heard, Jamie, to make sense of why a central bank digital currency. I often used to think that if cash continues to decline and we move to private sector instruments, then that is success. But I think in the example that you use, you tease out the kind of public policy imperatives potentially for something like a CBDC.
Right.
Yeah. Jamie, thank you so much for the time. What I'm delighted for, and if I'm bold in saying it, we didn't keep to the script. We kind of went with the dialogue, and I thoroughly enjoyed it. This was exactly what we had wanted. So thank you very much again for the time. You're a wealth of knowledge. We truly appreciate you sharing your thoughts with us. And thank you very much.
Well, thank you very much, Arif. It's been a pleasure to talk with you today.
Absolutely. So, colleagues, that brings us to the end of the 9th Hub Talk series. Please keep a lookout for the next Hub Talks that would be coming along. And just to remind you again that if you want to know more information about the Intergovernmental Fintech Working Group, kindly log on to www.ifwg.co.za. Till next time, please keep safe and keep healthy. Cheers.
Thank you.